Hello everyone, welcome back to Upside Down Data. Today I want to talk about applying the UDPI to the US dollar index. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So I want to give a quick shout out to Zatar. I apologize if I'm mispronouncing your username, who had left a comment on one of our earlier videos asking if we could apply the UDPI to the DXY, the US dollar index. And this is something I hadn't tried before, but I thought, yeah, that's an interesting idea. Let's go ahead and see what happens. So I'm going to show the UDPI for the DXY in a minute, but what I wanted to talk about first was just why we should care in the crypto world, right? You know, why do we care about the US dollar index if we're caring about crypto? What's the point? So first off, if you're not familiar with the DXY, essentially it's a index that measures the value, or the strength rather, of the US dollar relative to a basket of other fiat currencies. And so essentially higher values mean that the dollar is becoming stronger relative to those other currencies. Lower values mean that it's becoming weaker relative to those. And so the index tends to go up if a lot of people are moving money into US dollars, right? If a lot of capital is being put into the US dollar, it tends to gain strength relative to other currencies versus not. And so one way that you can interpret it is, for example, during kind of risk off times in the market, sometimes that's when the US dollar can go higher if people are kind of fleeing to the relative safety or stability of the dollar over maybe riskier assets like equities, or certainly something like crypto, which would be more risky. And so because of that, because the dollar kind of acts like a risk off asset, then oftentimes it will be inversely correlated to what a risk on asset like crypto will be doing. So what I just wanted to show here was the DXY index over time, and then show the price of Bitcoin over the same period of time, and just show in places where they've seemed to go against each other, kind of that inverse correlation, that negative correlation. So for example, if we start here in February of 2014, or rather just in 2014, you'll see that as the dollar went on kind of this parabolic run, this shooting up to the upside here, you'll notice that's when that coincided with a pretty protracted and deep bear market for Bitcoin over that same period, right? Coming off the 2013 high, going all the way into the depths of the bear market going into 2015. That's kind of one of these big points, drawdown in crypto, and there was a big gain in the dollar. Same thing we can see in this parabolic run in 2017, right? That as the price of Bitcoin rose over this time, the strength of the dollar, the value of the dollar, fell over that time relative to those other currencies. So you can see that inverse correlation here. Same thing happened again then as we came out of the March 2020 crash. See this huge drop in the DXY that corresponded to this big uptick in Bitcoin's price over that same period. And then as we've gotten the dollar recovering to the upside, or moving back to the upside, maybe that's kind of been associated with this kind of sideways, slightly up movement of Bitcoin, but not this kind of big parabolic move we've seen before. So a lot of crypto traders talk about the DXY as being something to keep an eye on, just because sometimes when the DXY is falling, that can be good news for risk on assets like crypto. And so for crypto to see a big move to the upside, oftentimes, not always, but oftentimes that goes along with a fall in the DXY index, the US dollar index. So that's why we should care potentially about what the DXY is doing, is because when it's falling, that tends to be good for crypto. When it's rising, that tends to be bad for crypto. So what applying the UDPI to the DXY can do for us is it can tell us, you know, is the DXY overheated in a sense? Is a pullback potentially plausible or feasible, likely right now, or is it less likely? Is the dollar at a lower risk position right now? So that's what I'm going to show you here. So I'm going to pull up the UDPI for DXY, for the US dollar index, and this is on, I should note, the weekly chart. I chose to use the weekly chart because the data for this goes all the way back into the 80s, and so these moves tend to play out over longer periods of time. So I decided to look at this on the weekly time frame to kind of be able to capture some of those broader moves. And so I still think it makes sense, just slightly different, right? Because with the UDPI for crypto, we tend to look at the daily charts. Here I'm just looking at the weekly chart for DXY. But what you can see is that the UDPI does a good job of identifying these kind of high risk points for the DXY that have precipitated these big corrections to the downside, and the same thing up here, you know, coming up here, correcting down, or kind of sideways action that's then led into this kind of up and down sort of action. So applying the UDPI to the DXY seems feasible. It seems like it can give some useful information potentially about the upside versus downside potential for the DXY. That's, you know, upside downside potential indicator. That's what it tells us, right? What's the upside potential? What's the downside potential in a given point in time? That seems realistic from the model's perspective. And what you'll notice is that we've kind of been in this range over the last number of years. And the DXY, as I mentioned, has been kind of recovering over the past couple of years, coming out of this relative low risk zone, or this relative point where the upside potential is outweighing the downside. Now we're back up into this higher kind of risk zone, kind of where we've seen rejection in the past, similar levels. And I think we can see this a bit closer if I just zoom in on the UDPI level across time here. So now replacing the y-axis with UDPI, just its level over time for DXY. And one thing I think is of note is that throughout the kind of history on the weekly chart for DXY, applying this UDPI to it, you can see that the kind of high-risk zones where we've seen these kind of corrections to the downside have tended to occur at around 2 to 4, with only one time having it pop up to 5, up to that highest risk zone there. So this kind of general region here might be considered a general resistance point for DXY on this weekly time frame from the UDPI's perspective, right? That oftentimes by the time it realizes this much of the realistic upside potential, it doesn't go much further and then it moves back down. And you'll see we're re-entering that zone right now. Kind of as we speak, we're entering that zone on the DXY, or the UDPI for the DXY. So doesn't mean that we have to see a correction or that we have to see a precipitous drop in the DXY immediately, right? Because it could realize more upside potential. It's done that in the past. Wouldn't be implausible. But it certainly is feasible that we could be getting kind of to the end of this current run that the DXY has been putting in, and maybe some reversion back to the downside is expected to some degree. That this realistic downside potential might come into play coming off of these kind of heated up levels here, right? We've been kind of seeing that ever since this big move up here to this ultimate high risk zone here, this ranging, where we've been going kind of from relatively low risk to relatively high risk to relatively low risk, and then maybe, you know, back to relatively high risk, and then maybe we're going to correct back down. Again, we'll have to wait and see, but it'll be interesting to see if that plays out with this general range that the DXY has been in. We've been kind of just going back and forth between these levels for quite a while now. Same thing with the downside. This level of kind of negative 2 to 3 has oftentimes acted as support throughout the history, with just a few times here breaking down below it. So it'll be interesting to see if we do get that reversion back down to one of these levels. And certainly if that did happen, you know, if this does act as a rejection point for the DXY and it ends up having to correct, I would see that as being very potentially a bullish sign for the crypto market. I mean, frankly, it would be bullish also for equity markets, probably just any risk on asset or riskier asset, but certainly crypto being kind of further out on the risk spectrum relative to something like the equities market. I would see that as being a positive thing for crypto. If we saw a big correction in the DXY, if saw it kind of start dumping back down, correcting, then that could give tailwinds for crypto to go up, because, you know, if the dollar is falling, you know, maybe capital is then flowing back into those riskier assets like crypto. Now, obviously nothing is guaranteed. We'll have to watch and wait and see what happens, but certainly I think this is in a way hopeful that we're re-entering kind of that zone that's been established as general resistance in the past for the DXY. And so we'll have to keep an eye on this, and if this does continue to get riskier and riskier and riskier, that might just make it more and more likely that that correction will follow, and then we'll end up seeing an asset like asset types like crypto be able to really appreciate from there. So I think this is just an interesting analysis, something to keep an eye on. And I like this idea of applying the UDPI beyond just crypto, because I do think it gives useful context for broader the broader markets, right? We've applied the UDPI to the S&P 500. Down the line, I'd like to apply it to some of the other stock market indexes, like the NASDAQ, for example. And I think also applying it to DXY is also just interesting. It gives this bigger macro perspective. So I think this is a cool kind of application of this upside downside kind of analysis. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.